Oh boy. Oh boy, oh boy, oh boy, oh boy. Here we go. Here we go. Nvidia earnings. This can break the camel's back. This could destroy everything. And I think that's why people didn't even flinch when the FOMC minutes came out. We covered that obviously in detail. Go check that out on the main channel. But boy, the market is so tenuous about Nvidia earnings. It's almost like everybody thinks this market is just propped up on AI, which maybe it is. I guess we're about to find out. Nvidia in their last earnings call was very, very optimistic about demand from enterprise. In fact, they discussed how they don't even have enough supply availability to fulfill the orders they have. So to see some kind of sudden drop in Nvidia orders would almost be a way of suggesting that the entire economy is going to crap. Enterprise AI customers are going, you know what? Screw it. Let my competition take all the AI chips. I don't want them because we're going into a recession. That's what a miss from Nvidia would tell you. It would be really bad. Now, it depends on, of course, how bad the miss is. We've got earnings coming up. It's going to be about 20, 30-ish minutes before we've got the earnings. We've got about 9 minutes of the market left here. I mean, look, we're expecting 7% volatility here. This announcement is scheduled for 1:20. Earnings call follows 40 minutes after that, 2 p.m. So we're going to be live for a while. Hope you got yourself some coffee. And if you're watching this on replay, well, then you kind of have an outline of what to expect. In 30-ish minutes, 28-ish minutes from now, you'll have the actual earnings release. And then about another 40 minutes thereafter, you'll have the earnings call. So what do we got? I mean, well, look, I mean, this is a market that is heavily dependent on the NASDAQ and the Magnificent Seven doing well. And there's nothing that'll tell you about insight regarding the stock market other than Nvidia right now or individual company earnings. Like, if Nvidia's doing well, then Meta's probably doing well. If Nvidia's doing well, then Google's probably doing well. Amazon's probably doing well. Google, Oracle, Salesforce, all of these companies are basically begging for AI chips right now. Now, maybe the estimates are too optimistic, but the estimates, realistically, they're just slightly above what Nvidia told us they had color on for this quarter. So in order for us to miss to the downside here, we would really have to have Nvidia somehow miscalculate how excited people were. And you'd almost have to start getting chips getting canceled, chip orders getting canceled. I mean, I have to say, Nvidia's or Salesforce's CEO seemed, Mark Benioff, seemed almost like desperate to get his hands on employees from OpenAI. I mean, he I think sent 2 or 3 different tweets out. Here they are, for example. So we have a few here. Oh, well, these are multiple tweets. Good Lord. But anyway, Salesforce will match any OpenAI researcher who has tendered their resignation, full cash and equity immediately to join Salesforce AI. I mean, he's so desperate for AI employees. He's saying email the CEO at salesforce.com right here. You see, we'll match anybody who's been affected, or we'll hire anybody who's been affected on their H-1B visas. I mean, anything you could do to attract talent here. This is not the sign of a market that's like, oh yes, y'all are screwed. This isn't that kind of a sign leading into this. Now, of course, we could all get blindsided. We could totally 100% get blindsided here by what we get from Nvidia. And that blindside could go in both directions. Because what happens if Intel and TSM call up, Jensen Huang, and they're like, we got more capacity, print. And Nvidia's like, yo, Microsoft and all the others, we got more capacity. And they're like, buy it, pump it. Well, you could actually get a pretty substantial beat here. So it could go either way. Honestly, what I would be praying for the sake of the entire market is just match, man. Just give us what you said you were going to do. You don't even have to beat it. Just don't, it's going to screw all the people with straddles. And remember, if you're playing options on this, you're not going to be able to close your options until Friday. So you better suck up that theta decay. But it does mean that you're going to have an even bigger return than you would have otherwise been bargaining for if there was no freaking Thanksgiving in the middle. But then again, I guess you could close tomorrow. No, I guess it depends on your Fridays if you're holding till Friday. Well, yeah, because the market is open tomorrow, so maybe that's not exactly true. Yeah, whatever. Okay, you figure your own gambling out. So what we got over here, just a quick recap. If we get any kind of negativity, like if on supply chains, like if Nvidia says, hey, what about if supply chains, like we have all the demand in the world, but what if our supply is running behind? And what if we're screwed on supply? Well, this stock will tank probably if you get a bad supply outlook. And I want to read you this from Bloomberg Intelligence. With supply for Nvidia's chips running behind demand, there and no significant signs of generative AI demand for accelerators slowing, Nvidia is likely to report another beat. And that's Wall Street's expectations. Likely to report another beat. I want to be transparent. I own Nvidia stock. I got exposure to Nvidia stock. It's in my actively managed ETF. I have no shorts against this, and I'm not trading earnings. I want to be very clear about that. But anyway, Nvidia's ability to quickly design new China-specific products combined with high demand in the rest of the world should mute the impact of US-China restrictions on 2024 top line. Along with AI, gaming is likely to produce growth in the second half. That's now driven by back-to-school sales and the market returning to typical seasonal patterns. Okay, we'll see. So that's Bloomberg Intelligence. That's what Bloomberg Intelligence thinks. We've got, we've heard this a million times before about a new era of computing. We'll see how that goes. I do believe that the future of Nvidia relies on cash-rich companies. Oracle, Google, Meta, Facebook, that's redundant, Meta, whatever, Amazon. So these cash-rich companies, if all of a sudden they cut orders, or like Tesla's like, nah, we don't want your H100s anymore, that's poopy doopy doopy doopy. That's very, very poopy doopy doopy. So that wouldn't be good. OpenAI rebuild at MSFT, that I don't know if that's going to happen anymore, because now Sam Altman is in discussions to maybe come back as the director of the board of directors, and basically go back to working at OpenAI rather than Microsoft. I do think Microsoft is interested in creating some kind of rival product in-house now, especially with the uncertainty that was here recently created. But I want you to see the pain that AI euphoria can create. I mean, look at Palantir. Palantir is selling off 7% today. I opened a position on this. I think it was at about 883. I started 1883. 8, that'd be cool. No, I was buying Tesla for $100 when this sucker was 8. Anyway, so 1883, or maybe it wasn't as low as $100, but you know what I mean. I'm being facetious. Point is, 1883 is where I was buying the sucker. This thing ran up this morning to like 2185. I would venture this 7% drop is almost completely due to fear that Nvidia is going to miss, and that's it. That's it. It's the end of AI. The end of AI is upon us. That's what the bears think, who probably don't understand Nvidia or AI. It's okay. It's hard. I know. Okay, that's mean. Oh, well. So anyway, this is, we got the closing bell in like 45 seconds. So we'll go listen to the closing bell. Nvidia's basically just sitting at that 500 line. It's like, we will not close above 500. If you get a big beat 20 minutes after the close on Nvidia, next fib is 731. Okay, I don't actually think we're going to go to the next fib. I think it's almost time to redraw the fibs. But let's just say sky's the limit if you get a good a crazy beat here. But again, that would require an increase in supply availability and more demand. See if it closes above. Let me know. Let's get the bell.
We're bidding them up. They can.
Yeah, and how long the build out takes and all the rest of it. Yep.
All right, good stuff. Good Thanksgiving. There's the bell. All right, Dow's going to go out modest loss, really across the board, modestly in the red. I'll send it into OT now with Morgan and John.
Range bound and down as the S&P and NASDAQ snap their 5-day winning streaks. That is the scorecard on Wall Street, but the action is just getting started. Welcome to Closing Bell.
No, duh, range bound. Like, what do you expect? You have Nvidia earnings on deck. You have Autodesk on deck. You have HP on deck. You have Jack in the Box on deck. Urban Outfitters on deck. Why? When you're waiting for Nvidia, why would the market rally? Just the day before? It's just not going to happen, or the day of, rather. You got to get the actual earnings to justify it. All right, let's see what we got in terms of Autodesk earnings and what we're going to end up getting from some of these companies here. I'm waiting for Autodesk now. Autodesk is first on deck. Hewlett Packard is on deck as well. We have Nvidia. Okay, Autodesk comes in. Autodesk beats software company right here. Q3 adjusted EPS 207 versus the estimate of 2. Operating margin comes in at 39 versus 37.3 rather. You've got revenue for Q4 forecast matching expectations. This is a match and a beat here. Operating income, nice beat. This looks really good so far. ADST, good job, ADST. And it's down 2%. Because that makes entire sense. Why wouldn't it be down? Okay, there we go. It looks like it's starting to move again. But anyway, jeez Lord. Okay, so then we're going to get JWN Nordstrom coming up here. As well as Hewlett Packard, Nordstrom, we're looking for... let's see here. They're at 05 along with Urban Outfitters. Autodesk again, a beat. It's up about 1% right now. Waiting for HP, obviously waiting for Nvidia. That's the big thing we're all paying attention to right now. What do we have? How did Nvidia close? Autodesk up a couple percent now. Nvidia, yeah, closes slightly under, but I think you're getting a little bit of excitement over the fact that Autodesk beat. That's a good sign. So Autodesk again with the beat. We're now waiting also for Urban Outfitters. And then we also have Jack in the Box, which is ticker symbol Jack. Every time I drive by that with my son, who's 8, he says, look, it's me in a box. Get it? Because his name's Jack. Anyway, so let's see here. Okay, I have all earnings on deck. I'm just basically on standby here now for all these earnings to start coming through. This is gonna be pretty exciting. These are some big numbers here we're expecting with Nvidia. This is probably more exciting than Microsoft or Apple or Google or some of the other big ones. Non-GAAP EPS 207 at Autodesk versus the 199 expected. Good job, Autodesk. Up now 3%. There we go. There we go. Here comes the rise. Good job on Autodesk. They've been in a little bit of a downtrend, a little bit of a slumpy duty. Oh, actually, they just started an uptrend again. Look at that. Look at that. Actually, the longer-term uptrend is continuing. That's crazy. Yeah, if we kind of extend this out right here, you get that we're pulling from over here, roughly here, roughly. It's rough, but it shows you a longer-term trend here. You've got, again, obviously patience here for Nvidia. Are they going to be able to get all-time new highs here? We've got Tesla up 2.3% on the day. Let's take a look at how some other things closed. We got about a minute before the next earnings roll in. So let's take a look at some of the numbers we had. We had Tesla 2.3. It's actually on the upper side over there with Abercrombie. Boy, they've like tripled in the past few weeks, by the way. So if you're wondering about a company that's tripled recently, it's not Coinbase, although that did triple this year. It is actually Abercrombie. Kind of wild. I think HP will also be a little bit of a tell for data center area. So we'll get those numbers. HPQ ticker symbol for that. Hewlett Packard. With a Q, I guess. Anyway, then there's C3AI. Dix went from positive 10% to only up 2% today. So I don't know if you're actually interested in retail. Maybe there's an op. Then you've got, let's see here. Palantir's drop at 7% as well as Rivian's drop. Pretty painful today. Rivian with the shuffling up of the ownerships or the leadership structure at the company in terms of responsibilities. Carnival, Intel, Roblox giving back a few percent here. Robinhood, a couple percent. And Nvidia giving up about just under 1%. Really waiting now, though, for Nvidia to report, obviously. Nordstrom out with, it looks like SG&A came in lower than expected. Net sales came in slightly lower than expected, but adjusted EPS beat. So adjusted EPS beats, and their No forecast yet, but they did slightly miss on total revenue, 3.32 bill versus 3.42. What is that, like 2%, 3%, something like that? So we'll look at JWN. JWN Nordstrom tanking on that, probably because it didn't dispel like fears of a slowdown like what you saw with Best Buy and Lowe's this morning. Okay, Urban Outfitters coming in with 88 cents, beating estimates with retail comp sales up 5.6% for Urban Outfitters. 5.6%. Stock basically flat here in the after hours. Jack in the Box, operating EPS less than expected going forward. EPS for, let's see here. Let's see what the stock's doing. Stock's basically flat. EBITDA 325 to 335. The estimate was 326. That's in line. Q4 operating EPS, or sorry, 2024 operating EPS forecast was 660, coming in at a midpoint of about 637. So a little bit of a miss there on EPS, maintaining their dividend, but that adjusted EPS did end up missing at Jack in the Box. Urban now going down about 1%. Nordstrom only down about 2% at the moment. Autodesk maintaining that 3%. Jack in the Box just authorized a buyback program of $250 million. Urban Outfitters, Q3, 88 cents versus the 82 cents. Nordstrom, sales come up short, echoing broader retail industry pressure. Waiting now for Hewlett-Packard, and then we're going to be getting Nvidia after a little bit of a break, looking at I wonder how Affirm is moving with these retail movements today. Affirm basically flat, down 1.69% on the day, flat in the afters. Autodesk continuing to move out as well. Nvidia comes out at about 120, so we have about 13 minutes to go. Let's find out. Let's see here. Gonna have a real Black Friday. Let's see here. Okay. So what else? Yeah, 4:20 p.m. exactly Eastern time. That's 1:20 out here. Exactly. So what else do we have? I'm looking for HP now. Any second on HP. Okay. Trying to get some. I see some comments here about some folks are saying, maybe there was some Elon selling or whatever. I haven't seen a Form 4 from anyone other than Andrew Bagliano. That's not actually how you pronounce his name. Baglino, I think it is, but I don't know. Anyway, he is an officer of Powertrain. He exercised some options, it looked like, but no, I haven't seen any indications of any other kind of selling. But who knows? So waiting now for HP. Waiting. Okay, so let's see here. Waiting for what data do we have here? Okay, all right, good. This looks good. So watching, still no HP yet. They were supposed to report here at 05. We don't have them yet. You can see Autodesk actually moving nicely here, 3.39%. Nvidia has rotated down a little bit. Jack in the Box down about 2.74% now. Let's see if there's an update on Jack in the Box. Yeah, the annual forecast missed, and the buyback isn't really doing anything. Comp inventory at Urban Outfitters up 1%. Nordstrom reports gross merchandise value down 7.1% year over year at Nordstrom. That's going to cause deflation. Here it comes. Anyway, all right. Waiting for HP. Still not out. So we're going to be getting HP and, oh, that's right. HP is actually scheduled for 4:15, my fault. So 4:15, and then 5 minutes thereafter, we'll get Nvidia. So we get a little moment to go anyway for those. Watching to see how, let's see what they're saying over here. Let's listen in.
$2 trillion, but right now they flipped 1.2 trillion and change for Nvidia, a little under 800 billion for Tesla, and that was the reverse over here. So it's sort of like the same amount of market cap being bet on these twin themes. They've just sort of flipped at this point. On a given day, They also are the two stocks that trade the most dollar volume. They have the most call option volume. So there's just a tremendous amount of kind of energy and directional excitement around these names. And so we'll see how it plays once those numbers are out, John.
Is Nvidia right now, Mike, in a class of its own in the sense that it's been an enormous grower over the year? So you look at that part, wow. But then it's also still near those all-time highs. So it's both special and stable.
Yeah, you don't see many mega cap stocks that are up 240% year to date, and the price earnings multiple went down over that period of time because of how much expected earnings went up. That is the case with Nvidia, has been remarked many times. So that is pretty singular in terms of the market right now. Usually it's the other way around, like with Tesla. The market cap was surging because the market was giving Tesla credit for stuff that it hadn't yet achieved in the far distant future.
Hey.
Okay, Mike Santoli, we'll see you later this hour. After the break, much more on Nvidia with results just minutes away. We're going to bring you all the key numbers as soon as they cross.
It's 9 minutes away, okay? Chill out. Yeah. All right, let's see. Okay, so yeah, remember, as we wait for Nvidia and HP here, we'll take a look at the numbers we are expecting. Okay, ready, folks? Let's do El Numeros. The El Numeros that we are expecting for Nvidia, I actually wrote them down right here compared to expectations. I'm going to update them as there is a possibility these numbers have changed over the last 24 hours since our course member live stream when we went pretty deep with course members on Nvidia. Black Friday sale going on, by the way. So we're looking at 3.365 on EPS with revenue expected to come in at 16.094. And yeah, that's roughly 16.1. Margin pricing in at 72 bips. Let me see if I can get a little bit more. Let's expand what we have here. That appears to be roughly the same. Consensus overview. These are the, yep. That margin, it's actually gone up a tiny little bit. 4.9. There we go. 72.49. Just to give you the revised. And then Wall Street consensus is looking for adjusted EPS. Let's write that down. We'll write that right here. Adjusted of 3.37 if I round up by half a cent. And then GAAP, we're looking for 3.06. Okay. Remember, a lot of the GAAP estimates, they add back in stock-based comp, they realize stock-based comp, the adjusted takes out stock-based comp because they don't really see it as an expense. It is technically dilutive to shareholders, so you're still paying for it. Yeah, anyway, we're going to see here if Michael Burry's semiconductor short is going to pay off. Will Michael Burry be victorious?
Just close the fucking door. Close the door.
All right. Data center revenue obviously has doubled for Nvidia, driven by InfiniBand, infrastructure rewiring, building out. I want to hear about that Grace Hopper 200, baby. It's basically their CPU that operates with their GPUs in the server stack. It's a competitor to Intel, to AMD. I mean, they're all competitors for each other. They're all chip designers. They all use like the same wafers and manufacturers and all that kind of stuff. Yeah, that's all the same nonsense. They just have different designs, different styles, and therefore different performances. Bitcoin down about 1% after the CZ nonsense. Finally, been calling that for years. I've always thought the guy was a fraud. It's nice to see it finally. I mean, it's sad because you don't want somebody to be a fraud because it like ruins your trust in society. But you saw it just at every level in crypto. It's so sad. We got duped. Anyway, HP coming out in 1 minute now. We are about actually probably closer to 15 seconds away. Somebody here in the chat is saying Disney calls. Somebody else is asking me what hairstyle am I going to go for next? I don't know. I was thinking like surfer dude, epically long. Anyway, yeah, look at this breakout on Disney. Damn, bro. You had a perfect downward wedge that turned into a gorgeous, delicious breakout. Now, if only we can get that breakout at end face. That has been the most delicious short pattern ever. Tesla actually probably the most shorted stock of hedge funds. So it is actually right now. So how do we reconcile that? Well, we squeeze them, baby. Okay, all right. Y'all know I'm long on Tesla. We already know that. So no surprise. All right, come on, baby. Hewlett Packard on deck. In a second now. Come on, baby. Come on. Here he comes. Adjusted EPS. Oh, that's a miss. That's not good for adjusted EPS going forward on the forecast. Personal systems revenue comes in at 9.4 versus the 9.52 expected. That's a miss. For the net revenue, they came in at 13.82. That's a miss compared to the 13.88 billion they expected. Free cash flow comes in at 1.9 billion versus the estimate of 1.92. Q1 forecast adjusted EPS, that would be 81 cents versus 85 cents. That is a 5% miss at Hewlett Packard. CEO sees PC market growing, bottoming out. That's actually potentially a tailwind for Nvidia for the PC side. But I don't know what they miss here. What happened, boys? Adjusted EPS for the forecast 2024. The estimate was 347, comes in right around that. Yeah, 345 was the 347 was the estimate, comes in about 345. However, that miss on guidance is probably what's hitting. That Q1 adjusted missing by 5%. 5% miss on Q1 adjusted. Stock now down 2.4%. Jack in the Box drops 4% after that. Nvidia did not give an F. Nvidia literally did not even, okay. Maybe that was the flinch right there. That was the flinch. But beyond that, Nvidia did not care at all. Who still uses HP? HP Inc. falls 4% after Q1 adjusted EPS lags. Yeah. Womp, womp, womp. Where's this?
Lost the lead.
Oh. Even though I'm a licensed financial advisor, real estate broker, I'm becoming a stockbroker. That one. This one.
Sell.
Okay. Nordstrom, let's see here. Oh, okay. Nordstrom talking about fewer estimates on discounting of items going forward. I don't know about that. Does that mean they've already done the discounting? Oh, who knows? Nobody knows. Elon Musk better than I do. Okay, that's definitely not true. 210 curve, by the way. Let's look at the 210. The 210 treasury yield curve is negative 48 basis points inverted, 5-year break even after the Fed's nonsense minutes came out, drops 2.2. Let's freaking go. Oh, that's great. 2.2. That's fantastic. And the 5-year forward, 2.26. Both of them plummeted. Let's go. Okay, I like this. I could get into this. Autodesk boosting that year outlook, getting people excited. Jack in the Box. Yeah, their forecast missing is really what tanked them there. Surprised actually how much this one's falling. Okay. 1 minute away, baby. Now I got to cast a spell on you. Make sure to join the course member live streams and utilize the Black Friday sale on everything available at meetkevin.com. There. I'm sure you're at meetkevin.com now looking at the gold versus the platinum versus the diamond tiers. All right. Anyway, do whatever's right for you. You know, I'm a big fan of sharing all the perspective I have, and there's a lot of it in those courses for business building, team building, communication, sales, entrepreneurship, LLCs, insurance, liability, bullshit not to do, bullshit to do. There's a lot. Anyway, a lot of new things too, which is really fun. All right, boys and girls, we are now about 10 seconds away from the scheduled NVIDIA release. We are watching the NVIDIA sticks. Here we go. Oh, I don't have it yet. And no. I'm I'm going full screen on the Nvidia. Oh, here it is. Okay. Oh, wow. That's a big beat. Adjusted EPS, $4.02 versus $3.36 expected. Huge beat. Holy crap. Oh, shit. Gross margin, 75% versus 72.5%. Holy crap. Data center revenue, 14.5 billion versus 12.8. Holy shit. Oh my God. Why is it going down then? These numbers are such a beat. Data set, geez. Revenue is expected to be $20 billion plus or minus. I have no idea why the stock going down now. Revenue expected to be $20 billion plus or minus. We've got Q3 adjusted. I mean, everything here beat. That is weird. But that's the way the stock market works. It all goes to the toilet. Look at that. How does that make? Oh my gosh, that beat is insane. Holy crap. Like, forget, I'm looking at this going like, whatever. Okay, stock down 4%, buying up with those numbers. Holy crap. How do you beat that much? We're going to go through these numbers and then we'll go through their earnings call. This is huge. Okay, I'll leave that crashing stock up. This is why it's like, we talked about this before. It's like, if you're going to do anything, maybe it straddles. But obviously, that's up to you. I didn't do anything on it. But this is such a good beat. This is way higher than expected. Nvidia Investor Relations. Okay, here we go. News. And I'm looking at the tape as it comes through. 20 billion plus or minus. The estimate was 17.9. This is like an across the board 12 to 15% beat on numbers. This is absolutely incredible. This should be green tomorrow. I don't know if this is like market manipulation or what in the background here, or some insanity going on, but who cares? Long term, this is amazing. And this is really good for the rest of, quite frankly, the entire AI market, everything. This is freaking amazing. So I want to see how other stocks are reacting, because this Nvidia movement is just stupid. But let's see here. Tesla's down 0.2%. Okay, big deal. What about Palantir? It fell today. It's down 1%. Everything kind of just almost, it's kind of like people were waiting for the earnings and then they hit the sell button. That was really weird. CFO commentary Q3, but all of this beat like substantially. This is crazy. Okay, I'm going to save this. So if I hit download, come on, baby, come on. I want you to see this. Okay, here we go. Save. This is the today's 21 Nvidia CFO commentary. Holy smokes, man. That is such a beat. Okay, here we go. All word. CFO commentary. Here it is. 3, 2, 1, and action. Okay. Oh my gosh. So, like, just compare these for a moment. Well, let me get the other one up so we have it handy. Nvidia. Okay, so we were pricing in like 16.1 and 72% margins, and in the threes for GAAP, right? Look at what we got. 18 billies in rev, way higher margin. Net income, diluted shares per earnings, way above both adjusted and GAAP. Here's your adjusted, beats by like 70 cents. This is such a good report. Holy crap. Compute and networking. This is going to include your data center, 14.6 billies. We were looking for 12, man. Nvidia US licensing requirements did not have a meaningful impact. Oh, here it is. Expect sales to China to decline significantly in Q4. There's your pain point. It was China. China. Here it is. That's why. We were looking for China, which was one of the things we had written down. And they're expecting, there it is. Look at that. Chinese sales. Here, are you ready for this? Our sales to China and other affected destinations derived from products that are now subject to licensing requirements have consistently contributed about 20 to 25% of data revenue over the past few quarters. So this is, hold on. That's, I think that's Elon's lawsuit. Hold on one sec. There we go. Okay. Okay. That's over the past few quarters. Okay. That's a red flag, right? We expect that our sales to these destinations will decline significantly in the fourth quarter, though we believe that decline to be more than offset by strong growth in other regions. Well, duh, because you just raised your guide like 15%-ish, right? So big deal. Gaming revenue up 81%. Let's go. Those 4090s are freaking dope. The fact that this sold off 20 or like 4% immediately after the earnings was a gift. Like, this should be up 10% tomorrow with these numbers. And again, I own the stock. I'm not just trying to pump it, okay? Like, I'd rather buy more of it. Like, I've got time. I got lots of time. But this is very, very good. And it shows you this AI stuff is anything but a fad. It is the cash-rich companies throwing money at this. This is not a sign of a recession, at least at this point, and certainly not for the rich companies. Now, that doesn't mean that small businesses aren't suffering and people aren't suffering. There's a lot of suffering going on there. Okay, wait, whoa, look at that back to school gaming sale boost here, because gaming includes sort of like PC, and usually back to school boosts this. It's cyclical. 86, we have 14.8%. Okay, let's go. Look at that. 14.8. I like to write this out. We have a professional visualization. Whoa, automotive went positive. Oh, they did the math for us. Oh, that's great. Okay. I mean, sometimes it registers better if I do it. But anyway, that was like 14.8%. You rounded. How could you round on me? Don't be round. I guess it beats being square. Oh, okay. So then we have automotive here up 3%. That's actually cool. Okay. Professional visual, none of that really matters. OEM, that doesn't matter. Data center, man. That's where it is. 41% increase, way bigger than expected. Oh my gosh, I can't believe they're guiding $20 billion. Bro, how? Wait, let me see where this 20 billion is. Nvidia revenue is expected to be 20 billion in Q4. What? Dude, my long-term target, okay? I said this in my video. Go fact check me. I said this in my video. My long-term target, I'm going to write this down. Kevin's LT target for Nvidia was 25 billion per quarter. And I said I thought people thought I was crazy. Now Nvidia is guiding 20 bill in Q4. Bro, that's crazy. My long-term, this was like my 27 line. My 2027 estimate. Bro, wow, this is insane. This very, 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 very good. Jensen Huang, Nvidia GPUs, CPUs, networking, AI foundry services, and Nvidia enterprise services are all what? Are all taking off. Okay, all growth engines in full throttle. The era of generative AI is taking off. Wow. Okay, Nvidia just went positive. Let's go. We solidify 100 here. Let's go. This is so good.
You know, investors had that window of opportunity 4 weeks ago. I mean, it just sat there for days to do so. So I would think about it that way.
Okay, we're going to go back to Christina Partsenevelos, who has more on Nvidia. Christina.
Yeah, I'm going through the CFO commentary, and
I already did.
Section on the China-U.S. export restrictions.
I already covered it.
Restrictions for China. We know that China contributes 20 to 25% of Nvidia's data center revenue. In this, they say, quote, we expect that our sales to these destinations being the China region, will decline significantly in the fourth quarter of fiscal 2024.
I already covered it. We specialize in markets where computing platforms can provide tremendous acceleration for applications. Yes. Data center revenue was up a record 297% from a year ago, up 41% from the last quarter. This is insane. Global demand for training and inferencing. I'm telling you, man, everybody wants their own chat GPT, and enterprise are cash freaking rich. Data center compute grew 324% from a year ago. Strong growth in the Hopper GPU architecture. I want to hear about the GH too. The CPU. Let's see here. Blah, 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 blah. Sales were significant. Okay, Ampere GPU. I don't know what that is. The AMP GPU. Let's quickly look. Ampere GPU architecture-based data center. Is that the old one? Oh, that's the old crap. That's 7 nanometer tensor core. That's old. Okay. That's the older 7 nanometer technology. I'm gonna write that next to it. You know, even Microsoft is doing its own 5 nanometer tech right now. There's the Grace 200. Let's go. We recognized initial ramp. We recognized additional initial ramp on the L40S GPU and the GH200. There it is, the super chip. Okay. CSPs, cloud service providers. Oh, yeah, come on. Look at this. Look at this. This is what I've been saying. Cloud service providers drove half of data center revenue. Half of the data center revenue coming from the cloud service providers. Your Googles, Amazons, Oracles. Consumer internet companies and enterprise consisted approximately of the other half. Wow. Wow, this is so good. The U.S. government announced updating licensing requirements regarding, you know, some of these countries. And then they flip-flopped and changed it again. Okay, we already talked about that. GPU 40 series for back to school. Yeah, man. If you're going back to school, man, you got to be able to play Rust on the 4090. I got the 4090 actually on this computer that I'm reading earnings off right now. Let's just say I don't use it for earnings. But anyway, well, I also use it for earnings. I don't just use it for earnings. Professional visualization revenue was up 108% from a year ago, 10% sequentially. Year-on-year increase, higher sell-in, blah, blah, blah. Automotive revenue, nominal margin. Why'd it go up? Probably because they could charge more and people were still buying it. Excess inventory purchases, whatever. Data center revenue growth is obviously going to help. Okay, we got that. Expenses were up 16%. Who cares? Stock-based comp. Give it away, man. Give it away. Interest income. This is the cool thing about the rich companies. Interest income was up. Nvidia now down right around 1% to the downside. Tesla's down about 1/3%. Hewlett Packard down about 3%. This is very good, though. I mean, what you're getting right now is buy the rumor, sell the news, but the news is good. Earnings call, by the way, in 28 minutes, so we'll be covering that. I'm very interested in that because, oh man, that could be a game changer as well. If you have not yet, make sure to go to meetkevin.com to check out the Black Friday sale. And remember that this is the Meet Kevin live channel. If you want to be live with me every day the market is open, 5:25 a.m., hit subscribe and hit the bell to this channel. This channel basically only goes live for market open and earnings when I feel like doing them for market close. So if you like market open, you just want facts, no politics, data, pure information. If that's what you're into, subscribe. It doesn't cost you anything. Hit the bell. It doesn't cost you anything. Meet Kevin live. I'm not doing it on the main channel. Okay? I'll be very clear about that. And I have been on time every day on my 5:30 a.m. open live streams. So I hope you join me for that. Yeah, just hit subscribe. It's literally not that hard. So, by the way, I'm going to keep going with this Nvidia thing. I just want to thank all of you because you are all way older than the normal finance cohort on YouTube. And I think we get along. I was looking at my statistics. You want to know something about this? I think you'll find this very interesting. There are 2 times as many people who watch Meet Kevin who are older than 55 as there are people who are younger than 25. 2 times as many over 55 as there are under 25. So if you are under 25, you are the absolute smallest group of people who watch my channel. We appeal to older folks. Biggest age range, by the way, is actually 35 to 44, followed by 25 to 34, followed by 45 to 54. We got the serious brains here. Well, that's not to say younger people. There's anything wrong with anyone younger. Just saying, you know, it's a little different. This kind of explains why people are like, Kevin, why'd you just make a video about the basics of how to invest in a Roth or whatever? We don't care. We want the real stuff. Ben Malla's coming through. I love that guy. Ben, I just don't want to fly with you again. Cash and cash equivalents and marketable securities were $18.2 billion, up from $13.4. Dude, that's a lot of money, man. 18.28 billion, up from 13.14 billion a year ago. 16 bill a quarter ago. Oh my gosh. Accounting receivables were 8 bill. Dude, there's so much money. Inventory 4.78 billion. Days of inventory at 92. That's probably much of that for like the gaming, since the other stuff just flies off the shelf. Depreciation, amortization, don't care. This is absolutely insane. 1 quarter, $20 billion. Holy crap. Kevin is a boomer. Hey man, what's wrong with boomers, bro? Earnings call is in 25 minutes. I'm 102. I have almost as many people who watch my channel who are 65 plus as I do 18 to 24. Like if you're 18 to 24, it's impressive. And I want to know who the 13 to 17-year-olds are who are watching, because that's also very odd. But that's 0.1% of my views is that age range. It's so wild. This is so good. Good freaking job, Nvidia. Hey, can y'all do me a favor? Can y'all send Simona an email and say, could you invite Meet Kevin to do a tour of anything for YouTube at Nvidia? We love you. You know, he runs an actively managed ETF. Y'all are a major position in it. You know, maybe if they get like 5 emails from y'all, they'll be like, you know what? Let's hit him up and have him email me or copy me on it, even if you want. staff@meetkevin.com. Okay? Together we can do it. I want to film it so badly. This is so cool. This is so great. I mean, nothing about this is bad. Any kind of sale on Nvidia stock tomorrow is like delicious to me. It's so great. Because look at these numbers. They're gorgeous. Rates come down, it'll be even more extreme. Okay. Wow. Let me see if I can get... Okay, so this is their CFO commentary. Let's see here. Jeff Bezos sells Amazon stock? No, he didn't. What a guy. Okay, I saw him on TikTok yesterday doing like creepy laughing at some magic tricks. It was a little odd. It's kind of like, oh, I hope I never have that kind of creepy laugh. Sorry, Jeff. We shouldn't be making fun of you. You seem like a nice guy. Okay, so if I go to sec.gov, filings, search, no feedback. Let's find out. Again, we are waiting for the earnings call, which will begin in about 22 minutes. I'm going to write that out. 2 p.m. earnings call. He was waiting to move to Florida so he didn't get taxed in Washington. Oh, that's so smart. Oh, you're right. Wait. No, Washington doesn't have a state income tax. Neither of them have a state income tax. No, that doesn't make a difference. I know Florida doesn't, but I also... pretty sure Seattle, unless there's like a city tax or something, but I'm pretty sure Washington doesn't. Anyway, okay, Amazon, security filings. There's just a bunch of 144s hit. Yeah, a bunch of them. Whatever. Who cares? What's this one? I guess I kind of want to see the Bezos one. May as well while we're looking for. That's David. Would you guys all like coordinate this stuff? Probably, actually. They do the 10b5-1 plans, which is just basically planned insider selling. People get mad at me when I say that, but come on, man, it's all rigged. And I'm not saying that in like the negative way. You know, I'm not trying to say that there's anything wrong. It's just like that's the way you could do it. It's a defense, right? 10b5-1 plans are just a defense to insider trading. Anyway, so, okay, whatever. This is about Nvidia. So, forecasts, yet another record revenue, but stock dips. It's down 0.6%, whatever. You are all drinking Kool-Aid. Tell me Tell me why these numbers are wrong. Come on, let's see here. Okay, Washington has an income tax on capital gains. Oh, really? Sounds very liberal of them. Washington income tax. It's not that there's anything wrong with that. Oh, Washington's new capital gains tax applies a 7% tax on an individual's adjusted long-term capital gains that are located in Washington. This applies only to individuals. You're right. Dang, Bezos just dodged 7%. Honestly, that 7% just gave him a free house in Florida, I feel like. That's probably why. Yeah, I'm moving to Florida. Let's get a lot of press. So the SEC, the IRS, sorry, different three-letter organization. So the IRS is like, dang it. Well, I guess it would be the state, probably, franchise tax board or whatever. Very Vegas says, I thought Meet Kevin was a licensed trader on Wall Street. Nope, I'm not a trader, nor am I a licensed trader. I don't even know. Can you be a licensed trader? I'm not even a broker. Oh, I'm a real estate broker. Not a stockbroker yet. Nvidia has been sandbagging results the last 2 quarters. I think they will exceed 20 billion in Q4. This is crazy. This is so wild. These are some really, really wild numbers. Okay, let's I want to see what some other commentary is here. Is there a suits commentary on Nvidia? Wow. Why are they not doing a suits commentary? So they do a suits commentary on Tesla, but not on Nvidia? What is this? What kind of line is this? Nvidia's less than perfect results fail to impress. What are you smoking? How is that less than perfect? That well exceeded all estimates. Mainstream media bullcrap. Equity sentiment wavered in post-market trading in the immediate aftermath of Nvidia's earnings. The report showed both estimated top revenue and slightly higher than anticipated expenses. I don't know if that's true. Were the expenses a little higher? 2.98. I mean, I can find out. I'll find out really quick. I didn't see that, but I was looking at the bottom line. So the bottom line beat by a lot. So are they? I mean, it's fine. If you want to pick out bear news, that's fine. The firm also sees China sales dropping significantly. Okay, well, that's fair. That's less than perfect. That is true, because originally they did say it wouldn't be a big deal. So operating, or let's go with EBITDA. EBITDA beat by 19%. Net income beat by 18%. Revenue beat by 12%. EPS gap beat by 21%. Actual adjusted EPS beat by 19.4%. Like, what are you possibly smoking? So, oh, by the way, I just got, two of you sent an email already, at least who copied me. I don't know, maybe there were. Thank you. Shout out to Brad and shout out to Artem for encouraging a Meet Kevin invite out there. That's really cool of y'all. Thank you for that. I see your emails here. I don't know if more sent, but that's really cool. So yeah, if anybody else wants to do that, I think we had the email right here. And then what I'm going to do is I'm going to follow up with an email too. And hopefully we can go do like a nice YouTube tour. I think it'd be really cool. So thank you for that. Okay. So as we wait for the earnings call, Tesla's down about 0.5%, Nvidia's down 1%. Just watch this get digested and the real big boys and girls put their pants on tomorrow and execute some sexy buys on these plays tomorrow. That's my take. Unless, of course, they do a poopsie doopsies in the earnings call. If Elon's running the earnings call, we may as well sell now. Oh, that was mean. Kevin, that was mean. That's insensitive. You're right. I'm sorry. Okay, cool. So, okay. Trying to see what else I can get here. 10-year treasury down 2.4%. Earnings call starts in 16 minutes. We have, let's see. I want to see what the bears are saying right now. they're only quoting the China declined significantly number. JP Morgan actually guided sector head on a video. Oh, no. Okay. They're just talking about it. JP Morgan's optimistic about it. Okay. Big deal. Okay. Some Hunter Biden memes. Binance, take our responsibility as a custodian very seriously. Sure you do. Get your money out of there. Okay. I'm really surprised there's not more Wall Street commentary on Nvidia. But anyway, the earnings call will be in just a moment. So we'll obviously cover that live. What we can do in the meantime is, let me see here if Doomburger has anything to say. Sometimes Doomburger does. Doomburger for me is a little... Uh-oh. I'll find something else to talk about for a moment. May have made a little oopsies. Anyway, data center revenue surges again. Yes, we know. Nvidia vastly outperforms expectations. Yes, we know. Trading in Nvidia ETFs show traders preparing for upbeat earnings. Well, we just got that. No end in sight, says the Wall Street Journal for the AI boom. Oh, I see what I did wrong. Okay, I'll fix that. Anyway, Wall Street Journal, chipmaker Nvidia said sales reached a record in its latest quarter, gave positive outlook. Sales more than tripled to $18.1 billion in Nvidia's latest quarter. Profits from semiconductors underpin the AI boom. Yes. Okay. Then we have, let's see here. Bro, you need to be on Rumble. I know you hold back. But can I just like multi-stream to Rumble as well? Like if I also multi-stream to Rumble, am I gonna get censored by YouTube? Anyway. Okay. Okay. Let's see here. We are data revenue surges. Okay, fine. Whatever. Let's while we wait for the earnings call, which starts in 13 minutes, let me grab a little. Oh, wait, what do we have here? Hold on. What's this?
And it's really under the guise.
China. This could be related.
But it's all in critical infrastructure. And I would say that due to the debt trap loans that we have seen, the cost overruns, the design flaws, labor standards, environmental standard violations, and things like that have occurred with all of these, not all of the projects, but several of them.
Bro, imagine if she was your mom. Like, I feel like I would be the most disciplined child ever. I don't know how much fun I would have, but I feel like I would not be slouching ever.
Communications, energy.
Nearshoring, it's been a trend. We've been hearing about it, this change in supply chains coming out of the pandemic and amid security concerns. What are you seeing on the ground right now across the region?
Well, I would say that the U.S. is investing, the U.S. quality investment, and we are investing in the hemisphere. The problem is that leaders don't see it. The presidents of the countries don't see it. We have over 800 U.S. companies in Colombia, over 250 U.S. companies in Panama, over 200 in Honduras. Who knew? We don't talk about it. We don't brag. We don't talk about the great things that quality U.S. investment bring, transparency, labor rights, environmental standards. We hire local workers with the People's Republic of China and the Belt and Road Initiative. They bring in their own Chinese laborers. All of those things to contribute to the economies of countries. We've got to talk about it. And then we also have to have our U.S. companies competing on the contracts for critical infrastructure. We're not competing on those for deep water ports, for space, for telecommunications and energy. And we need to do that. It's a matter of national security.
And I also asked General Richardson about the military's role as it relates to the movement of goods and people, whether it's the trafficking of illegal drugs or the migration of people, especially as Southcom works with countries to counter activities by cartels, or as the military refers to it, transnational criminal organizations.
In terms of, I'll go back to the economic security, and economic insecurity in this region is fueling irregular migration. And so poverty, lack of health care, food insecurity, lack of jobs. You know, how do we bring that to the hemisphere? About 10 years ago, we talked about Central America and South America being able to feed and fuel the world. We need to talk about that more. All of the resources that this region has, over 60% of the world's lithium is in this region. They already produce over 50% of the soybean for the globe. Sugar, meat, corn, over 30% that is provided for the globe. You have gold, copper. You have light sweet crude that was discovered off Guyana. You're going to have the fastest growing economy in Guyana for the next 5 years, it's anticipated.
I also asked General Richardson whether the Israel-Hamas war has changed the threat profile within this hemisphere, closer to home. They are looking for—
Bro, what are you smoking, Shadow Jacker? Does that mean... Okay, I don't want to know what you're doing in the shadows, Shadow Jacker. Anyway, Shadow Jacker, the way you have to look at Nvidia is not based on its trailing 12 EPS, because then what you're doing is you're comparing to a totally different company. That doesn't make sense. I mean, if you're looking at the last 12 months, you're looking at $7.48, right? 500 divided by 748. You're at 64.2 times earnings. That's your PE ratio for the trailing 12. Okay? You want to go back to January of 2023 when the earnings were $2.44 for the year ended? You're at 200 times PE. What are the January EPS figures expected to be? Well, we just got the estimate. Let me see the forecast here. So forecast. Actually, I want to see it. The forecast was forecast EPS for Q4 released in January. 20 bill. Oh, we would have to take a margin. They didn't give us EPS for Q4. Okay, whatever. The EPS now was $4.02, and we're projected to have revenues about 20% higher. So you're probably going to be like $4.80 in just the quarter. And the entire year is probably looking at like $12. So now all of a sudden you do 500 divided by $12 of EPS. The sucker's trading for 41 times. All of a sudden it don't look that bad, Shadow Jacker. Oh, that bad, that is. Anyway. Okay. So let's see here. Shadow deleted the comment. RIP. Earnings call it at 2 p.m. PT. Okay. Looks better than Amazon. Agreed. Why did Nvidia dump to 468 really quick? I don't think market makers. I think the way to look at it is you have a lot of people who speculate on earnings, especially hedge funds, and they'll trade after hours. I generally don't think of market makers as your, I mean, they're trying to take advantage of spreads, but it is funds or institutions who try to trade. A little different. It's not that big deal though. But anyway, what else here? 6.5 minutes to go for the call. But yeah, definitely blowout numbers. It also is likely that it fell because of the China fear. Yeah, we can update the spread peg sheet tomorrow in the course member live. We'll do that. All right. We're just now waiting. But anyway, I think it's fair for Nvidia to say, well, I mean, we are negative. I was going to say gain the lead, but I don't know if we could say that. I guess we could say this.
Just close the fucking door. Close the door.
Yeah. Updates on HouseHack. It's freaking awesome. I wired money for 2 more properties today. All right. So let's see what else the suits might be saying. WTI shrugs off large crude inventory build. Nvidia reports blowout earnings. China slowdown will be overlooked. Whatever. Actually creates a tailwind in the future for when they actually start generating profit again for China. Although people think Nvidia is priced to perfection, which might be true. but which was also the warning that everybody got before the earnings, and now the earnings come out and it's even better than perfection.
Sales, Nordstrom racked down just 1.8%. Lower markdowns, though, did help gross margins expand year over year. But Eric Nordstrom does point out continued uncertainty and softening consumer spend, key as we are going into this Black Friday week here. Weaker than expected fourth quarter earnings are implied. You can see the shares are down just a bit, but they've bounced around here after that result. And then Urban Outfitters also out. They did beat on earnings and on revenues as well as same-store sales, up a total 5.6%. They also noted gross margins beat here too. Again, higher initial merchandise markups and lower merchandise markdowns. No guidance here on this one, but we are waiting for more details from that. And these shares, again, bouncing around too, but higher now by about 1.75%. Morgan and John, back to you.
Court, thanks. We're also waiting for Nvidia's earnings call, just moments away. Stocks down about 1%. Joining us now, Dan Flax, analyst from Neuberger Berman. What do we need to hear, Dan, for investors to decide which way the stock is going to move from here?
We need to hear a little bit more in terms of the supply outlook and how that's going to unfold. And we also want to hear more about the dynamics in China, where the geopolitical and the trade tension are going to remain a factor over the coming years. I think, though, when we step back, really the story here is around continued execution and broadening of the growth drivers in the data center. The company is innovating and executing incredibly well. And the other critical piece to the investment as we think about the next couple of years is really the power of the ecosystem. You have millions of developers on the Nvidia platform continuing to leverage the company's software, their application frameworks as they tackle really difficult problems in areas like drug discovery, climate change, fraud detection. So we see a lot to like here, and certainly there'll be near-term dynamics, but we continue to like the name.
Arguably, Nvidia is the mega cap hardware AI stock of the year. Microsoft, the mega cap software AI stock of the year.
Whoever's asking if we would buy homes in Utah, yeah, send us deals. If anybody wants to send us real estate deals, send them to kevin@househack.com.
How it affects Microsoft?
We'll buy cash.
I feel that we have all the technology.
Oh, not this guy again. No.
Keep innovating on the products you saw at our Ignite conference last week, up and down the stack from silicon to co-pilots, and committed to OpenAI and Sam. And that's, irrespective of what configuration, obviously we want Sam and Greg to have a fantastic home if they're not going to be in OpenAI and all the colleagues at Microsoft. But, I am exactly where I was on Friday morning.
Are you where you were on Friday morning, Dan, when it comes to the AI value potentially in this stock?
I am where I was on Friday morning. The key here really is that Microsoft and the men and women at OpenAI, whether they stay at OpenAI or they join Microsoft, the key is really the ability to push forward on the product roadmaps. And from Microsoft's standpoint, the ability to continue infusing AI across its platforms. I think we're seeing it with Copilot, where it remains early, but I think there's a lot of good value to customers, and over time that will create additional value for shareholders. And the other piece is, I think AI will continue to be an important driver for the Azure cloud. And so stepping back, I think Microsoft remains very well positioned, even as the situation with OpenAI remains fluid.
Okay. Going back to Nvidia for a second, it's not just a growth story, it's an earnings story as well. How sustainable is that piece of the puzzle?
I think it is sustainable. The seasonality, product cycles, clearly cyclical headwinds, I think will remain a factor from one quarter to the next. But I think the bigger story as we look out over the next 2 or 3 years is that as you get the growth drivers coming through in the data center, gaming, another important business, remains vibrant. So when you pull all of that together and think about the free cash flow generation for the company over the next 2 to 3 years, I think there is substantial growth ahead. And so when we look at that, we think the shares remain attractive, and we think the company is continuing to create value for its customers and will continue to create additional value for its shareholders.
Yeah, I got a bunch of you here. Phil, Frederick, Mike, Justin, Dustin, Jacob. Thank y'all. Thank you. A bunch more here too as well on the Nvidia request. Earnings call starts in about 20-ish seconds.
More broadly this week and into next, I'm wondering how much do consumers need to see discounts to keep spending through the entire holiday season?
It's going to be key. Also worth noting that we have a very strong, even though the day was lower for stocks, a strong rally afoot for the month. That's going to do it for us here at Overtime.
Fast Money starts now.
Boring. Here we go.
Good afternoon. My name is JL, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's third quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, again, press the star 1. Thank you. Simona Jakowski, you may now begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the third quarter of fiscal 2024. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the fourth quarter and fiscal 2024. The content of today's call is NVIDIA's property. It can be reproduced or transcribed without our prior written consent.
What?
During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All statements are made as of today, November 21st, 2023, based on information currently available to us. Except as required by law, we assume no obligation to update any statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Simona. Q3 was another record quarter. Revenue of $18.1 billion was up 34% sequentially and up more than 200% year on year, and well above our outlook of $16 billion. Starting with data center, the continued ramp of the NVIDIA HGX platform based on our Hopper Tensor Core GPU architecture, along with InfiniBand end-to-end networking, drove record revenue of $14.5 billion, up 41% sequentially and up 279% year on year. NVIDIA HGX with InfiniBand together are essentially the reference architecture for AI supercomputers and data center infrastructures. Some of the most exciting generative AI applications are built and run on NVIDIA, including Adobe Firefly, ChatGPT, Microsoft 365 Copilot, CoAssist, Now Assist with ServiceNow, and Zoom AI Companion. Our data center compute revenue quadrupled from last year, and networking revenue nearly tripled. Investment in infrastructure for training and inferencing large language models, deep learning recommender systems, and generative AI applications is fueling strong, broad-based demand for NVIDIA accelerated computing. Inferencing is now a major workload for NVIDIA AI computing. Consumer internet companies and enterprises drove exceptional sequential growth in Q3, comprising approximately half of our data center revenue and outpacing total growth. Companies like Meta are in full production with deep learning recommender systems and also investing in generative AI to help advertisers optimize images and text. Most major consumer internet companies are racing to ramp up generative AI deployment. The enterprise wave of AI adoption is now beginning. Enterprise software companies such as Adobe, Databricks, Snowflake, and ServiceNow are adding AI copilots and assistants to their platforms. And broader enterprises are developing custom AI for vertical industry applications such as Tesla and autonomous driving.
Cloud service providers drove roughly the other half of our data center revenue in the quarter. Demand was strong from all hyperscale CSPs, as well as from a broadening set of GPU specialized CSPs globally that are rapidly growing to address the new market opportunities in AI. Nvidia H100 Tensor Core GPU instances are now generally available in virtually every cloud, with instances in high demand. We have significantly increased supply every quarter this year to meet strong demand and expect to continue to do so next year. We will also have a broader and faster product launch cadence to meet a growing and diverse set of AI opportunities. Toward the end of the quarter, the U.S. government announced a new set of export control regulations for China and other markets, including Vietnam and certain countries in the Middle East. These regulations require licenses for the export of a number of our products, including our Hopper and Ampere 100 and 800 series, and several others. Our sales to China and other affected destinations derived from products that are now subject to licensing requirements have consistently contributed approximately 20 to 25% of data center revenue over the past few quarters. We expect that our sales to these destinations will decline significantly in the fourth quarter, though we believe they'll be more than offset by strong growth in other regions. The U.S. government designed the regulations to allow the U.S. industry to provide data center compute products to markets worldwide, including China. Continuing to compete worldwide, as the regulations encourage, promotes U.S. technology leadership, spurs economic growth, and supports U.S. jobs. For the highest performance levels, the government requires licenses. For lower performance levels, the government requires a streamlined prior notification process. And for products even lower performance levels, the government does not require any notice at all. Following the government's clear guidelines, we are working to expand our data center product portfolio to offer compliant solutions for each regulatory category, including products for which the U.S. government does not wish to have advance notice before each shipment. We are working with some customers in China and the Middle East to pursue licenses from the U.S. government. It is too early to know whether these will be granted for any significant amount of revenue. Many countries are awakening to the need to invest in sovereign AI infrastructure to support economic growth and industrial innovation. With investments in domestic compute capacity, nations can use their own data to train LLMs and support their local generative AI ecosystems. For example, we are working with India's government and largest tech companies, including Infosys, Reliance, and Tata, to boost their sovereign AI infrastructure. And French private cloud provider Scaleway is building a regional AI cloud based on Nvidia H100s, InfiniBand, and Nvidia AI enterprise software to fuel advancement across France and Europe. National investment in compute capacity is a new economic imperative, and serving the sovereign AI infrastructure market represents a multi-billion-dollar opportunity over the next few years. From a product perspective, the vast majority of revenue in Q3 was driven by the Nvidia HGX platform based on our Hopper GPU architecture, with lower contribution from the prior generation Ampere GPU architecture.
Right, that was what I said.
The new L40S GPU built for industry standard servers began to ship, supporting training and inference workloads across a variety of customers. This was also the first revenue quarter of our GH200 Grace Hopper Superchip, which combines our ARM-based Grace CPU with a Hopper GPU. Grace and Grace Hopper are ramping into a new multi-billion-dollar product line. Grace Hopper instances are now available at GPU specialized cloud providers and coming soon to Oracle Cloud. Grace Hopper is also getting significant traction with supercomputing customers. Initial system shipments to Los Alamos National Lab and the Swiss National Supercomputing Center took place in the third quarter. The UK government announced it will build one of the world's fastest AI supercomputers, called Isambard AI, with almost 5,500 Grace Hopper superchips. German Supercomputing Center, ULEC, also announced that it will build its next generation AI supercomputer with close to 24,000 Grace Hopper superchips and Quantum 2 InfiniBand, making it the world's most powerful AI supercomputer with over 90 exaflops of AI performance. All in, we estimate that the combined AI compute capacity of all the supercomputers built on Grace Hopper across the US, Europe, and Japan next year will exceed 200 exaflops, with more wins to come. Inference is contributing significantly to our data center demand as AI is now in full production for deep learning, recommenders, chatbots, copilots, and text-to-image generation. And this is just the beginning. NVIDIA AI offers the best inference performance and versatility, and thus the lower power and cost of ownership. We are also driving a fast cost reduction curve. With the release of NVIDIA TensorRT LLM, we now achieve more than 2x the inference performance or half the cost of inferencing LLMs on NVIDIA GPUs. We also announced the latest member of the Hopper family, the H200, which will be the first GPU to offer HBM3E, faster, larger memory to further accelerate generative AI and LLMs. It boosts inference speed up to another 2x compared to H100 GPUs for running LLMs like Llama 2. Combined TensorRT LLM and H200 increased performance or reduced cost by 4x in just 1 year, without customers changing their stack. This is a benefit of CUDA and our architecture compatibility. Compared to the A100, H200 delivers an 18x performance increase for inferencing models like GPT-3, allowing customers to move to larger models and with no increase in latency. Amazon Web Services, Google Cloud, Microsoft Azure, and Oracle Cloud will be among the first CSPs to offer H200-based instances starting next year. At last week's in Microsoft Ignite, we deepened and expanded our collaboration with Microsoft across the entire stack. We introduced an AI Foundry service for the development and tuning of custom generative AI enterprise applications running on Azure. Customers can bring their domain knowledge and proprietary data, and we help them build their AI models using our AI expertise and software stack in our DGX Cloud, all with enterprise-grade security and support. SAP and Amdocs are the first customers of the NVIDIA AI Foundry service on Microsoft Azure. In addition, Microsoft will launch new confidential computing instances based on the H100. The H100 remains the top performing and most versatile platform for AI training, and by a wide margin, as shown in the latest MLPerf industry benchmark results. Our training cluster included more than 10,000 H100 GPUs, or 3x more than in June, reflecting very efficient scaling. Efficient scaling is a key requirement in generative AI because LLMs are growing by an order of magnitude every year. Microsoft Azure achieved similar results on a nearly identical cluster, demonstrating the efficiency of NVIDIA AI in public cloud deployments.
All right.
Networking now
Jensen.
exceeds a $10 billion annualized revenue run rate. Strong growth was driven by exceptional demand for InfiniBand, which grew fivefold year on year. InfiniBand is critical to gaining the scale and performance needed for training LLMs. Microsoft made this very point last week, highlighting that Azure uses over 29,000 miles of InfiniBand cabling, enough to circle the globe. We are expanding NVIDIA networking into the Ethernet space. Our new Spectrum X end-to-end Ethernet offering with technologies purpose-built for AI will be available in Q1 next year, with support from leading OEMs, including Dell, HPE, and Lenovo. Spectrum X can achieve 1.6x higher networking performance for AI communication compared to traditional Ethernet offerings. Let me also provide an update on our software and services offerings, where we are starting to see excellent adoption. We are on track to exit the year at an annualized revenue run rate of $1 billion for our recurring software, support, and services offerings. We see two primary opportunities for growth over the intermediate term, with our DGX Cloud service and with our NVIDIA AI Enterprise software. Each reflects the growth of enterprise AI training and enterprise AI inference, respectively. Our latest DGX Cloud customer announcement was this morning as part of an AI research collaboration with Genentech. The biotechnology pioneer also plans to use our BioNeMo LLM framework to help accelerate and optimize their AI drug discovery platform. We now have enterprise AI partnerships with Adobe, Dropbox, Getty, SAP, ServiceNow, Snowflake, and others to come. Okay, moving to gaming. Gaming revenue of $2.86 billion was up 15% sequentially and up more than 80% year on year. With strong demand in the important back-to-school shopping season, with NVIDIA RTX ray tracing and AI technologies now available at price points as low as $299. We enter the holidays with the best ever lineup for gamers and creators. Gaming has doubled relative to pre-COVID levels, even against the backdrop of lackluster PC market performance. This reflects the significant value we've brought to the gaming ecosystem with innovations like RTX and DLSS. The number of games and applications supporting these technologies has exploded in that period, driving upgrades and attracting new buyers. The RTX ecosystem continues to grow. There are now over 475 RTX-enabled games and applications. Generative AI is quickly emerging as the new killer app for high-performance PCs. NVIDIA RTX GPUs define the most performant AI PCs and workstations. We just released TensorRT LLM for Windows, which speeds on-device LLM inference up by 4x. With an installed base of over 100 million, NVIDIA RTX is the natural platform for AI application developers. Finally, our GeForce Now cloud gaming service continues to build momentum. Its library of PC games surpassed 1,700 titles, including the launches of Alan Wake 2, Baldur's Gate 3, Cyberpunk 2077, Phantom Liberty, and Starfield. Moving to ProViz. Revenue of $416 million was up 10% sequentially and up 108% year on year. NVIDIA RTX is the workstation platform of choice for professional design, engineering, and simulation use cases, and AI is emerging as a powerful demand driver. Early applications include inference for AI imaging in healthcare and edge AI in smart spaces and the public sector. We launched a new line of desktop workstations based on NVIDIA RTX Ada Lovelace generation GPUs and ConnectX Smart NICs offering up to 2x the AI processing, ray tracing, and graphics performance of the previous generations. These powerful new workstations are optimized for AI workloads, such as fine-tuning AI models, training smaller models, and running inference locally. We continue to make progress on Omniverse, our software platform for designing, building, and operating 3D virtual worlds. Mercedes-Benz is using Omniverse-powered digital twins to plan, design, build, and operate its manufacturing and assembly facilities, helping it increase efficiency and reduce defects. Oxon is also incorporating Omniverse into its manufacturing process, including end-to-end simulation for the entire robotics and automation pipeline, saving time and cost. We announced 2 new Omniverse cloud services for automotive digitalization available on Microsoft Azure, a virtual factory simulation engine, and autonomous vehicle simulation engine. Moving to automotive. Revenue was $261 million, up 3% sequentially and up 4% year-on-year, primarily driven by continued growth in self-driving platforms based
typed in by humans in the past, and these are...
My bad. Sorry about that. I'll catch you up on what we missed.
It used to be based on explicit queries. It is now based on natural language queries, intention queries, semantic queries. And so we're excited about the work that we're doing with SAP and Dropbox and many others that you're going to hear about. And one of the areas that is really impactful is the software industry, which is about $1 trillion or so, has been building tools that are manually used over the last couple of decades. And now there's a whole new segment of software called copilots and assistants. Instead of manually used, these tools will have copilots to help you use it. And so instead of licensing software, we will continue to do that, of course, but we will also hire copilots and assistants to help us use the software.
Okay, quick follow-up. So we missed the China segment. So basically they said that the new regulation compliant chips will be coming in months. However, we don't have good visibility on the China impact. As soon as they said that, the stock started trading down again. And they said the new chips will not help revenue in the current quarter. That kind of catches you up on what we missed.
And you could see that it's transforming hardware in 2 ways. One is something that's largely independent of generative AI. There's 2 trends. One is related to accelerated computing. General purpose computing is too wasteful of energy and cost. And now that we have much better approaches called accelerated computing, you could save an order of magnitude of energy, you could save an order of magnitude of time, or you could save an order of magnitude of cost by using acceleration. And so accelerated computing is transitioning, if you will, general purpose computing into this new approach. And that's been augmented by a new class of data centers. This is the traditional data centers that you were just talking about, where we represent about a third of that. But there's a new class of data centers, and this new class of data centers, unlike the data centers of the past, where you have a lot of applications running used by a great many people that are different tenants that are using the same infrastructure, and that data center stores a lot of files. These new data centers are very few applications, if not one application, used by basically one tenant. And it processes data, it trains models, and it generates tokens, it generates AI. And we call these new data centers AI factories. We're seeing AI factories being built out everywhere, in just about every country. And so if you look at where we are in the expansion, the transition into this new computing approach, the first wave you saw with large language model startups, generative AI startups, and consumer internet companies. And we're in the process of ramping that. Meanwhile, while that's being ramped, You see that we're starting to partner with enterprise software companies who would like to build chatbots and co-pilots and assistants to augment the tools that they have on their platforms. You're seeing GPU specialized CSPs cropping up all over the world, and they're dedicated to doing really one thing, which is processing AI. You're seeing sovereign AI infrastructures, countries that now recognize that they have to utilize their own data, keep their own culture, process that data, and develop their own AI. You see that in India, about a year ago in Sweden. You're seeing it in Japan. Last week, a big announcement in France. But the number of sovereign AI clouds that are being built is really quite significant. And my guess is that almost every major region will have, and surely every major country will have their own AI clouds. And so I think you're seeing just new developments as the generative AI wave propagates through every industry, every company, every region, and so we're at the beginning of this inflection, this computing transition.
Your next question comes
Beginning
from
of the
line
wave.
of Aaron Rakers of Wells Fargo. Your line is open.
Yeah, thanks for taking the question. I wanted to ask about kind of the networking side of the business. You know, given the growth rates that you've now cited, I think it's 155% year over year and strong growth sequentially. It looks like that business is like almost approaching a $2.5 to $3 billion quarterly level. I'm curious of how you see Ethernet evolving, and maybe how you would characterize your differentiation of Spectrum X relative to the traditional Ethernet stack as we start to think about that becoming part of the networking narrative above and maybe beyond just InfiniBand as we look into next year. Thank you.
Yeah, thanks for the question. Our networking business is already at a $10 billion plus run rate, and it's going to get much larger. And as you mentioned, we added a new networking platform to our networking business recently. The vast majority of the dedicated large-scale AI factories standardize on InfiniBand. And the reason for that is not only because of its data rate, and not only just the latency, but the way that it moves traffic around the network is really important. The way that you process AI and a multi-tenant hyperscale Ethernet environment, the traffic pattern is just radically different. And with InfiniBand and with software-defined networks, we could do congestion control, adaptive routing, performance isolation and noise isolation, not to mention, of course, the data rate and the low latency and the very low overhead of InfiniBand that's natural part of InfiniBand. And so InfiniBand is not so much just a network, it's also a computing fabric. We put a lot of software-defined capabilities into the fabric, including computation. We'll do floating point calculations and computation right on the switch and right in the fabric itself. And so that's the reason why that difference in Ethernet versus InfiniBand, or InfiniBand versus Ethernet for AI factories, is so dramatic. And the difference is profound. And the reason for that is because you've just invested in a $2 billion infrastructure for AI factories. A 20, 25, 30% difference in overall effectiveness, especially as you scale up, is measured in hundreds of millions of dollars of value. And if you were renting that infrastructure over the course of 4 or 5 years, it really, really adds up. And so InfiniBand's value proposition is undeniable for AI factories. However, as we move AI into enterprise, this is enterprise computing, where we'd like to enable every company to be able to build their own custom AIs. We're building custom AIs in our company based on our proprietary data, our proprietary type of skills. For example, recently we spoke about one of the models that we're creating. It's called Chip Nemo. We're building many others. There'll be tens, hundreds of custom AI models that we create inside our company. And our company is, for all of our employee use, doesn't have to be as high performance as the AI factories we use to train the models. And so we would like the AI to be able to run in an Ethernet environment. And so what we've done is we invented this new platform that extends Ethernet. It doesn't replace Ethernet. It's 100% compliant with Ethernet. And it's optimized for east-west traffic, which is where the computing fabric is. It adds to Ethernet with an end-to-end solution with Bluefield, as well as our Spectrum switch that allows us to perform some of the capabilities that we have in InfiniBand, not all, but some. And we achieve excellent results. And the way we go to market is we go to market with our large enterprise partners who already offer our computing solution. And so HP, Dell, and Lenovo has the NVIDIA AI stack, the NVIDIA AI enterprise software stack, and now they integrate with Bluefield as well as bundle, take to market their Spectrum switch, and they'll be able to offer enterprise customers all over the world with their vast sales force and vast network of resellers, and a fully integrated, if you will, fully optimized at least end-to-end AI solution. And so that's basically it. Bringing AI to Ethernet for the world's enterprise.
Thank you. Your next question comes from the line of Joe Moore of Morgan Stanley. Your line is open.
Great, thank you. I wonder if you could talk a little bit more about Grace Hopper and how you see the ability to leverage kind of the microprocessor, how you see that as a TAM expander, and what applications do you see using Grace Hopper versus more traditional H100 applications?
Yeah, thanks for the question. Grace Hopper is in production, in high volume production now. We're expecting next year, just with all of the design wins that we have in high performance computing and AI infrastructures, we are on a very, very fast ramp with our first data center CPU to a multi-billion-dollar product line. This is going to be a very large product line for us. The capability of Grace Hopper is really quite spectacular. It has the ability to create computing nodes that simultaneously has very fast memory as well as very large memory. In the areas of vector databases or semantic search, what is called RAG, retrieval augmented generation, so that you could have a generative AI model be able to refer to proprietary data or factual data before it generates a response. That data is quite large. And you could also have applications or generative models where the context length is very high. You basically stored an entire book into its system memory before you ask it questions. And so the context length can be quite large. This way, the generative models have the ability to still be able to naturally interact with you on one hand. On the other hand, be able to refer to factual data, proprietary data, or domain-specific data, your data, and be contextually relevant and reduce hallucination. And so that particular use case, for example, is really quite fantastic for Grace Hopper. It also serves the customers that really care to have a different CPU than x86. Maybe it's European supercomputing centers or European companies who would like to build up their own ARM ecosystem and like to build up a full stack, or CSPs that have decided that they would like to pivot to ARM because their own custom CPUs are based on ARM. There are a variety of different reasons that drives the success of Grace Hopper, but we're off to just an extraordinary start. This is a home run product.
That's pretty bullish. Remember the part about the whole Ethernet wiring and stuff? That's a big deal. A lot of places are wired with Ethernet. They don't want to rewire to InfiniBand. If Nvidia has an Ethernet end-to-end, that's great.
I know there's a few moving parts. I guess on one hand, the purchase commitments went up a lot again, but on the other hand, the China bans would arguably pull in when you can fill the demand beyond China. So I know we're not even into 2024 yet, and it doesn't sound like, Jensen, you think that next year would be a peak in your data center revenue, but I just wanted to sort of explicitly ask you that. Do you think that data center can grow even into 2025? Thanks.
Absolutely believe that data center can grow through 2025, and there are of course several reasons for that. We are expanding our supply quite significantly. We have already one of the broadest and largest and most capable supply chain in the world. Remember, people think that the GPU is a chip, but the HGX H100, the Hopper HGX, has 35,000 parts. It weighs 70 pounds. 8 of the chips are Hopper. The other 35,000 are not. It has even its passive components are incredible. High voltage parts, high frequency parts, high current parts. It is a supercomputer, and therefore the only way to test a supercomputer is with another supercomputer. Even the manufacturing of it is complicated, the testing of it is complicated, the shipping of it is complicated, and installation is complicated. And so every aspect of our HGX supply chain is complicated, and the remarkable team that we have here has really scaled out that supply chain incredibly. Not to mention, all of our HGXs are connected with NVIDIA networking, and the networking, the transceivers, the NICs, the cables, the switches, the amount of complexity there is just incredible. And so I'm just, first of all, I'm just super proud of the team for scaling up this incredible supply chain. We are absolutely world class. But meanwhile, we're adding new customers and new products. So we have new supply, we have new customers, as I was mentioning earlier. Different regions are standing up GPU specialist clouds, sovereign AI clouds coming up from all over the world as people realize that they can't afford to export their country's knowledge, their country's culture for somebody else to then resell AI back to them. They have the skills, and surely with us, in combination, we can help them do that, build up their national AI. And so the first thing that they have to do is create their AI cloud, national AI cloud. You're also seeing us now growing into enterprise. The enterprise market has two paths. One path, or if I could say three paths. The first path, of course, is off-the-shelf AI. And there are, of course, ChatGPT is a fabulous off-the-shelf AI. There'll be others. There's also proprietary AI, because these software companies like ServiceNow and SAP, and there are many, many others, can't afford to have their company's intelligence be outsourced to somebody else. And they are about building tools, and on top of their tools, they should build custom and proprietary and domain-specific co-pilots and assistants that they can then rent to their customer base. They're sitting on a gold mine. Almost every major tools company in the world is sitting on a gold mine, and they recognize that they have to go build their own custom AIs. We have a new service called an AI Foundry, where we leverage NVIDIA's capabilities to be able to serve them in that. And then the next one is enterprises building their own custom AIs, their own custom chatbots, their own custom RAGs. And this capability is spreading all over the world. And the way that we're going to serve that marketplace is with the entire stacks of systems, which includes our compute, our networking, and our switches, running our software stack called NVIDIA AI Enterprise, taking it through our market partners, HP, Dell, and Lenovo, so on and so forth. And so So we're seeing the waves of generative AI, starting from the startups and CSPs, moving to consumer internet companies, moving to enterprise software platforms, moving to enterprise companies, and then ultimately one of the areas that you guys have seen us spend a lot of energy on has to do with industrial generative AI. This is where NVIDIA AI and NVIDIA Omniverse comes together, and that is a really exciting work. And so I think we're at the beginning of a basically across the board industrial transition to generative AI, to accelerated computing. This is going to affect every company, every industry, every country.
Your next question comes to the line of Toshiya Hari of Goldman Sachs. Your line is open.
Hi, thank you. I wanted to clarify something with Colette real quick, and then I had a question for Jensen as well. Colette, you mentioned that you'll be introducing regulation-compliant products over the next, couple of months. Yet the contribution to Q4 revenue should be relatively limited. Is that a timing issue, and could it be a source of reacceleration and growth for data center in April and beyond, or are the price points such that the contribution to revenue going forward should be relatively limited? And then the question for Jensen, the AI Foundry service announcement from last week, I just wanted to ask about that and hopefully have you expand on it. How is the monetization model going to work? Is it primarily, services and software revenue? How should we think about the long-term opportunity set? And is this going to be exclusive to Microsoft, or do you have plans to expand to other partners as well? Thank you.
Okay, thanks, Toshiya, on the question regarding potentially new products that we could provide to our China customers. It's a significant process to both design and develop these new products. As we discussed, we're going to make sure that we are in full discussions with the U.S. government of our intent in these products as well. Given our state about where we are in the quarter, we're already several weeks into the quarter. That's just going to take some time for us to go through and discussing with our customers their needs and desires of these new products that we have. Moving forward, whether that's medium term or long term, it's just hard to say. Both the ideas of what we can produce with the U.S. government and what the interest of our China customers is. So we stay still focused on finding that right balance for our China customers, but it's hard to say at this time.
Toshiya, thanks for the question. There is a glaring opportunity in the world for AI Foundry, and it makes so much sense. First, every company has its core intelligence. It makes up our company. Our data, our domain expertise. In the case of many companies, we create tools. And most of the software companies in the world are tool platforms. And those tools are used by people today. And in the future, it's going to be used by people augmented with a whole bunch of AIs that we hire. And these AI platforms just got to go across the world, and you'll see. And we've already announced a few: SAP, ServiceNow, Dropbox, Getty. Many others are coming. And the reason for that is because they have their own proprietary AI. They want their own proprietary AI. They can't afford to outsource their intelligence and hand out their data and hand out their flywheel for other companies to build the AI for them. And so they come to us. We have several things that are really essential in a foundry. Just as TSMC is a foundry, you have to have AI technology. And as you know, we have just an incredible depth of AI capability, AI technology capability. And then second, you have to have the best practice, known practice, the skills of processing data through the invention of AI models to create AIs that are that are guardrailed, fine-tuned, so on and so forth, that are safe, so on and so forth. And the third thing is you need factories, and that's what DGX Cloud is. Our AI models are called AI foundations. Our process, if you will, our CAD system for creating AIs are called NeMo, and they run on NVIDIA's factories we call DGX Cloud. Our monetization model is that with each one of our partners, they rent a sandbox on DGX Cloud where we work together. They bring their data, they bring their domain expertise, we bring our researchers and engineers, we help them build their custom AI. We help them make that custom AI incredible. Then that custom AI becomes theirs. And they deploy it on a runtime that is enterprise grade, enterprise optimized, or performance optimized, runs across everything NVIDIA. We have a giant installed base in the cloud, on-prem, anywhere. It's secure, securely patched, constantly patched, and optimized and supported. And we call that NVIDIA AI Enterprise. NVIDIA AI Enterprise is $4,500 per GPU per year. That's our business model. Our business model is basically a license. Our customers then, with that basic license, can build their monetization model on top of it. In a lot of ways, we're wholesale. They become retail. They could have a subscription license base. They could per instance, or they could do per usage. There's a lot of different ways that they could create their own business model. But ours is basically like a software license, like an operating system. And so our business model is help you create your custom models. You run those custom models on NVIDIA AI Enterprise. And it's off to a great start. Yeah, NVIDIA AI Enterprise is going to be a very large business for us.
Your next question comes from the line of Stacy Rasgon of Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my questions. Colette, I wanted to know, if it weren't for the China restrictions, would the Q4 guide have been higher? Or are you supply constrained in just reshipping stuff that would have gone to China elsewhere? And I guess along those lines, if you could give us a feeling for where your lead times are right now in data center, and just the China redirection such as this, is it lowering those lead times because you've got parts that are sort of immediately available to ship?
Right. Good call.
Yeah, Stacey, let me see if I can help you understand. Yes, there are still situations where we are working on both improving our supply each and every quarter. We've done a really solid job of ramping every quarter, which has defined our revenue. But with the absence of China for our outlook for Q4, sure, there could have been some things that we are not supply constrained that we could have sold to China, but we no longer can. So could our guidance have been a little higher in our Q4? Yes. We are still working on improving our supply and plan on continuing growing all throughout next year as well to work with that.
Your next question comes from the line of Matt Ramsey of TD Cowen. Your line is open.
Okay.
Thank you very much. Congrats, everybody, on the results. Jensen, I had a two-part question for you, and it comes off of sort of one premise. And the premise is I still get a lot of questions from investors thinking about AI training as being NVIDIA's dominant domain, and that somehow as inference, even large model inference, takes more and more of the TAM, that the market will become more competitive, you'll be less differentiated, et cetera, et cetera. So I guess the two parts of the question are number one, maybe you could spend a little bit of time talking about the evolution of the inference workload as we move to LLMs and how your company is positioned for that rather than smaller model inference. And second, up until a month or two ago, I never really got any questions at all about the data processing piece of the AI workload. So the pieces of manipulating the data before training, between training and inference, after inference. And I think that's a large part of the workload now. Maybe you could talk about how CUDA is enabling acceleration of those pieces of the workload. Thanks.
CUDA, let's go.
Sure. Inference is complicated. It's actually incredibly complicated. We this quarter announced one of the most exciting new engines optimizing compilers called TensorRT LLM. The reception has been incredible. You go to GitHub, it's been downloaded a ton, a whole lot of stars, integrated into stacks and frameworks all over the world, almost instantaneously. And there's several reasons for that, obviously. We could create TensorRT LLM because CUDA is programmable. If CUDA and our GPUs were not so programmable, it would really be hard for us to improve software stacks at the pace that we do. TensorRT LLM on the same GPU, without anybody touching anything, improves the performance by a factor of 2. And then on top of that, of course, the pace of our innovation is so high, H200 increases it by another factor of 2. And so our inference performance, another way of saying inference cost, just reduced by a factor of 4 within about a year's time. And so that's really, really hard to keep up with. Now, the reason why everybody likes our inference engine is because our install base. And we've been dedicated to our install base for 20 years, 20 plus years. We have an install base that is not only large, it's in every single cloud, it's in every, available from every enterprise system maker. It's, used by companies of just about every industry. And anytime you see an NVIDIA GPU, it runs our stack. It's architecturally compatible. It's something we've been dedicated to for a very long time. We're very disciplined about it. We make it our, if you will, architecture compatibility is job one. And that has conveyed to the world the certainty of our platform stability. NVIDIA's platform stability certainty is the reason why everybody builds on us first, and it's the reason why everybody optimizes on us first. All of the engineering and all the work that you do, all the invention of technologies that you build on top of NVIDIA accrues to and benefits everybody that uses our GPUs. And we have such a large install base, large millions and millions of GPUs in the cloud, 100 million GPUs from people's PCs, just about every workstation in the world, and they're all architecturally compatible. And so if you're an inference platform and you are deploying an inference application, you are basically an application provider, and as a software application provider, you're looking for a large install base. Data processing. Before you could train a model, you have to curate the data. You have to dedupe the data. Maybe you have to augment the data with synthetic data. You have to process the data, clean the data, align the data, normalize the data. All of that data is measured not in bytes and megabytes. It's measured in terabytes and petabytes. And the amount of data processing that you do before data engineering, before that you do training is quite significant. It could represent 30, 40, 50% of the amount of work that you ultimately do in ultimately creating a data-driven machine learning service. And so data processing is just a massive part. We accelerate Spark, we accelerate Python. One of the coolest things that we just did is called cuDF Pandas. Without one line of code, Pandas, which is the single most successful data science framework in the world, Pandas now is accelerated by NVIDIA CUDA, and just out of the box, without a line of code, and so the acceleration is really quite terrific, and people are just incredibly excited about it. Pandas was designed for one purpose and one purpose only, really data processing. It's for data science, and so NVIDIA CUDA gives you all of that.
Your final question comes from the line of Harlan Sur of JP Morgan. Your line is open.
Last one.
Good afternoon. Thanks for taking my question. if you look at the history of the tech industry, right, those companies that have been successful have always been focused on ecosystem, silicon, hardware, software, strong partnerships, and just as importantly, right, an aggressive cadence of new products, more segmentation over time. The team recently announced a more aggressive new product cadence in data center from 2 years to now every year with higher levels of segmentation, training, optimization, inferencing, CPU, GPU, DPU, networking. How do we think about your R&D OpEx growth outlook to support a more aggressive and expanding forward roadmap? But more importantly, what is the team doing to manage and drive execution through all of this complexity?
Okay.
Gosh, boy, that's just really excellent. You just wrote NVIDIA's business plan, and you described our strategy. First of all, there is a fundamental reason why we accelerate our execution, and the reason for that is because it fundamentally drives down cost. When the combination of TensorRT LLM and H200 reduced the cost for our customers for large model inference by a factor of 4. And so that includes, of course, our speeds and feeds, but mostly it's because of our software. Mostly the software benefits because of the architecture. And so we want to accelerate our roadmap for that reason. The second reason is to expand the reach of generative AI. The world's number of data center configurations. This is kind of the amazing thing. NVIDIA is in every cloud, but not one cloud is the same. NVIDIA is working with every single cloud service provider, and not one of their networking control plane security posture is the same. Everybody's platform is different, and yet we're integrated into all of their stacks, all of their data centers, and we work incredibly well with all of them. And not to mention, we then take the whole thing and we create AI factories that are standalone. We take our platform, we can put them into supercomputers, we can put them into enterprise. Bringing AI to enterprise is something, generative AI to enterprise, something nobody's ever done before. And we're right now in the process of going to market with all of that. And so the complexity includes, of course, all of the technologies and segments and the pace. It includes the fact that we are architecturally compatible across every single one of those. It includes all of the domain-specific libraries that we create. The reason why every computer company, without thinking, can integrate NVIDIA into their roadmap and take it to market. And the reason for that is because there's market demand for it. There's market demand in healthcare. There's market demand in manufacturing. There's market demand, of course, in AI, in financial services, and supercomputing, and quantum computing. The list of markets and segments that we have domain-specific libraries is incredibly broad. And then finally, we have an end-to-end solution for data centers. InfiniBand networking, Ethernet networking, x86, ARM, just about every permutation combination of solutions, technology solutions, and software stacks provided. And that translates to having the largest number of ecosystem software developers, the largest ecosystem of system makers, the largest and broadest distribution partnership network, and ultimately the greatest reach. And that takes a lot of energy. But the thing that really holds it together, and this is a great decision that we made decades ago, which is everything is architecturally compatible. When we develop a domain-specific language that runs on one GPU, it runs on every GPU. When we optimize TensorRT for the cloud, we optimized it for enterprise. When we do something that brings in a new feature, a new library, a new feature, or a new developer, they instantly get the benefit of all of our reach. And so that discipline, that architecture-compatible discipline that has lasted, more than a couple of decades now, is one of the reasons why NVIDIA is still really, really efficient. I mean, we're 28,000 people large and serving just about every single company, every single industry, every single market around the world.
Boom.
Thank you. I will now turn the call back over to Jensen Huang for closing remarks.
Our strong growth reflects the broad industry.
I'll do a summary, obviously.
From general purpose to accelerated computing and generative AI. Large language model startups, consumer internet companies, and global cloud service providers are the first movers. The next waves are starting to build. Nations and regional CSPs are building AI clouds to serve local demand. Enterprise software companies like Adobe and Dropbox, SAP, and ServiceNow are adding AI co-pilots and assistants to their platforms. And enterprises in the world's largest industries are creating custom AIs to automate and boost productivity. The generative AI era is in full steam and has created the need for a new type of data center, an AI factory, optimized for refining data and training and inference and generating AI. AI factory workloads are different and incremental to legacy data center workloads supporting IT tasks. AI factories run co-pilots and AI assistants, which are significant software TAM expansion and are driving significant new investment, expanding the $1 trillion traditional data center infrastructure install base, and powering the AI industrial revolution. NVIDIA H100 HGX with InfiniBand and the NVIDIA AI software stack define an AI factory today. As we expand our supply chain to meet the world's demand, we are also building new growth drivers for the next wave of AI. We highlighted 3 elements to our new growth strategy that are hitting their stride: CPU, networking, and software and services. Grace is NVIDIA's first data center CPU. Grace and Grace Hopper are in full production and ramping into a new multi-billion-dollar product line next year. Irrespective of the CPU choice, we can help customers build an AI factory. NVIDIA networking now exceeds a $10 billion annualized revenue run rate. InfiniBand grew 5-fold year over year and is positioned for excellent growth ahead as the networking of AI factories. Enterprises are also racing to adopt AI, and Ethernet is the standard networking. This week, we announced an Ethernet for AI platform for enterprises. NVIDIA Spectrum X is an end-to-end solution of Bluefield SuperNIC, Spectrum 4 Ethernet switch, and software that boosts Ethernet performance by up to 1.6x for AI workloads. Dell, HPE, and Lenovo have joined us to bring a full generative AI solution of NVIDIA AI computing, networking, and software to the world's enterprises. NVIDIA Software and Services is on track to exit the year at an annualized run rate of $1 billion. Enterprise software platforms like ServiceNow and SAP need to build and operate proprietary AI. Enterprises need to build and deploy custom AI co-pilots. We have the AI technology, expertise, and scale to help customers build custom models with their proprietary data on NVIDIA DGX Cloud and deploy the AI applications on enterprise-grade NVIDIA AI Enterprise. NVIDIA is essentially an AI foundry. NVIDIA's GPUs, CPUs, networking, AI foundry services, and NVIDIA AI Enterprise software are all growth engines in full throttle. Thanks for joining us today. We look forward to updating you on our progress next quarter.
All right. Summary. Really interesting with this AI foundry argument. They're calling themselves an AI foundry because really they are literally trying to hit every single layer of data and AI that you could possibly get your hands on and then profit from it. Because think about it, and a lot of people are going to miss this, but as Jensen said a few times, a lot of existing data centers are wired with Ethernet, but Ethernet does not have the bandwidth that InfiniBand does. That's why they try to sell InfiniBand, because the InfiniBand has higher bandwidth, lower latency, and it supports RDMA. When you look, though, compared to Ethernet, InfiniBand is a little bit more expensive, and most people have Ethernet. So if most people have Ethernet, it's more cost effective and it's easier to manage because everything's kind of like a standard tool and plug and play. Then if you could come out with a product that lets everybody on Ethernet use your AI stuff, your CPU, your Grace Hopper 200 CPU that they just announced, which they're rapidly scaling. They talked about this is a really big deal. The rapid scale on the CPU side. Don't forget that. The rapid scale on the H100. This is a double trouble force right here. You could go top to bottom Nvidia. It's like, well, they'll help you from the cables to the CPU at the top of this machine of the server rack, to the GPUs in the server rack, to the software that you're going to use and the stacks that you're going to use to be able to actually produce a product. This is an amazing company. Now, the question, like the only thing that you could really be upset about here is not the customer base, because the customer base is cash rich. Adobe, ServiceNow, Snowflake, Dropbox, SAP, 50% of their revenues for data center coming from cloud. This is huge. Okay. China doesn't even freaking matter. Like, whatever. Forget them. Like, this is so good. There's so much money to be made here. It's insane. The big question is the valuation too extreme, right? And so this is where you kind of have to look forward and go, well, I mean, if they're going to have $20 billion of quarterly potential revenues, we don't know if that'll continue forever. It probably won't continue forever, as even though supply will expand, I think the cost premiums for these products will shrink, which will bring revenues down. EPS skyrockets for a company like this. I mean, you're looking, $15 a share potentially for a year. Well, 500 divided by $15 a share means this company's selling for $33 or 33x, and they're growing at way more than 33 right now. But let's say they're growing at 33, you're paying one peg for Nvidia. Even if you think they're only going to do $12 in EPS in a year, fine, you're paying a 41 PE ratio. So their peg ratio is 41 divided by 35, 1.17. Like, for the growth, the price to earnings growth you're getting here is great, as long as the growth somewhat continues. And so far, it doesn't look like it's going to let up anytime soon. Eventually, we'll have to lap some really big numbers, and it's going to be hard, especially as prices come down. But it doesn't look like that is any time soon. Personally, to me, this is really optimistic. It shows that businesses are still spending. Massive enterprises are still spending, and those are employers of people. Employers of people, guess what? Jobs. And jobs keep us out of recession. We're certainly out of a deep recession. I don't know. I'm not seeing an issue here. I would not be surprised if this sucker is green tomorrow, because this is freaking awesome. This is really, really good. Now, obviously, I have a lot of exposure to Nvidia, so I'm biased, but I'm trying to look for the bad, and the bad would be long-term valuation. So I'm looking at some of the comments here. Not really anything. Intel, big fan of Intel, yeah. Let's see here. 20 bill on 18 bill revenue is 10%. Okay. Well, when I calculate EPS growth, we calculate earnings per share, not revenue growth. So thanks for saying, we're talking like an idiot bag here. It's a little stupid, but I think you are actually the one who's stupid, because we're talking about going from 18 billion to 20 billion in a quarter. Oh, that's 40% in a year. Oh, Noob Crunch got smoked. Maybe before you call someone idiotic, do some math. Oh. It's okay. It's okay. It's okay. I make mistakes too. So with that said, even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.
Just close the fucking door. Close the door.
See you at the podcast. I'll be up live at 4 p.m. Meet Kevin podcast. Goodbye.